What if everything you are hearing about oil in 2026 is designed to distract you from the biggest wealth-building opportunity of the decade? Stay right here, because this story could completely change how you see the global energy market. If you find this valuable, subscribe now so you never miss another story like this. Right now, headlines scream that the world is swimming in oil, that prices are crashing, and that the age of petroleum is finally over. But billionaires are quietly doing the exact opposite of what those headlines suggest. Warren Buffett's Berkshire Hathaway purchased an additional 8 million Chevron shares in Q4 2025, pushing the energy giant to 7.24% of the entire portfolio. That single move signals deep, long-term conviction in the oil sector from the world's most respected investor. The International Energy Agency projects a surplus approaching 4 million barrels per day in 2026 as OPEC nations accelerate production after 5 years of restraint. Brent crude prices are being pushed toward the $55 to $60 range, causing everyday investors to flee the sector entirely. But here is the critical distinction that separates billionaires from ordinary investors. They are not reacting to today's price. They are positioning for the supply crunch that analysts at Saxo Bank and Goldman Sachs predict will arrive by 2027 and intensify through the end of 2030s. The numbers behind the coming shortage are staggering and almost impossible to ignore once you understand them fully. Global oil production of approximately 105 million barrels per day declines naturally at 5 to 6% every single year. That means more than 5 million new barrels per day must be replaced annually just to keep production flat. Yet current global upstream investment falls $300 to $400 billion short of what is required to meet that replacement threshold each year. The IEA spent years arguing that no new oil investment was needed because of peak demand. In late 2025, it dramatically reversed course, acknowledging that new oil and gas development is now urgently required just to prevent production from collapsing. Existing fields are declining faster than anyone had previously modeled, a stunning admission from the world's most influential energy forecaster. Almost no retail investor noticed this reversal, but it carries enormous financial implications for anyone paying attention. This investment drought has already planted the seeds of a severe physical supply deficit. Cheap prices in 2026 will only deepen that deficit by discouraging further drilling and new exploration across every major oil-producing region on Earth. According to petroleum analysts at Rapidon Energy Group, exploration, spending, and new project discoveries have collapsed since 2020. Oil companies canceled long-cycle upstream projects that take 6 to 10 years to build. Believing peak demand would arrive by 2030, projects not approved today will simply not exist when the world desperately needs them. The IEA's forthcoming World Energy Outlook is expected to show oil demand rising continuously through 2050, abandoning the peak demand narrative that suppressed investment for 5 critical years. Goldman Sachs projects that while Brent crude may average $56 per barrel in 2026, prices will rebound sharply from 2027 onward. Sustained low prices are already weighing heavily on non-OPEC production and discouraging new project approvals worldwide. The absence of new major project approvals is creating a physical supply gap that no amount of OPEC drilling can quickly bridge. Chevron's own internal modeling projects the supply and demand gap will widen through 2035, reaching a staggering 50 million gallon per day shortfall. Buffett is not alone in this conviction. Berkshire Hathaway holds a 28.3% stake in Occidental Petroleum worth over $11 billion. Occidental's CEO and co were both net buyers of company shares in February 2026, purchasing 35,856 shares at market price. That is a powerful inside signal. The people closest to the balance sheets see enormous value in today's depressed prices. Occidental has publicly stated that 84% of its resource base breaks even below $50 per barrel, making it profitable even now. The energy sector is leading the entire S&P 500 index in 2026 with gains of more than 18%. Institutional investors are rotating out of overvalued technology stocks and into hard assets with real-world supply constraints and steady dividend income. ConocoPhillips operates in more than a dozen countries with average production costs near $40 per barrel. It remains profitable across virtually every realistic oil price scenario, while returning billions to shareholders through dividends and buybacks, despite the alarming headlines. ExxonMobil CEO Darren Woods stated the company expects to produce well over 2.5 million oil-equivalent barrels per day beyond 2030. Major projects already online and several near completion will deliver meaningful earnings growth regardless of short-term price swings. Oil's structural case is further reinforced by an unexpected new demand driver: artificial intelligence data centers. These facilities require enormous, continuous electricity that renewable sources alone cannot reliably provide, forcing technology giants to depend on oil and gas for power. Saudi Aramco CEO Amin Nasser argues the world is not undergoing an energy transition, but an energy addition. Global energy consumption is growing so fast that every source, fossil fuels and renewables alike, must expand simultaneously just to keep up. The bottom line is this: low oil prices today are destroying the future supply a growing global economy will desperately need. The best time to buy is precisely when most people are selling, and smart money has clearly identified this as that moment. What do you think, are billionaires right to buy oil aggressively right now? Or do you believe the world has truly passed peak oil demand forever? Drop your opinion in the comments and tell us what you think the price of oil will be by 2028. We read every single response and would love to hear your perspective. Subscribe now so you are the first to know when the next big opportunity emerges.